crude oil hitting the lows at 76, we have predicted that there is a reversal sign on the monthly charts in our monthly update for crude oil. While natural gas is the star, and again, as per prediction, we have said very clearly that there is a massive rally going to be in natural gas in the month of May. We have seen nat gas rising 70% towards 3.14 levels before closing the month at 2.6, just 50% of the complete rise. So can we expect this bullish momentum to continue in the natural gas? And can we expect oil to bounce back in the coming month as well? What is going to be our strategy trading crude oil and natural gas? We are going to see with the help of charts and indicators. This is a monthly review. We are also going to see what can be expected in the coming week. And at the end of every update, we are going to give you trading levels and a strategy. Watch till the end. And do not miss to watch the daily updates and targets which I share for crude oil and natural gas. In fact, twice a day. And this is the only channel to give you twice a day updates. First with the Asia and Europe session, next with the US. Just subscribe and press the bell icon to get the notifications. Do like, share and comment, which is the great motivation and support. Join the free Telegram channel for live updates and join the channel memberships here on YouTube to support them. Let's start first to look into crude, followed with nat gas. Watch. See, crude oil on the 4-hour charts, if you look at, see, it has been trading in this zone here. And if you look at the move here, I will see this as an expanding triangle here, where we have seen it delivering the highs and the lows. Where are the lows? Close to 76 levels now. And in fact, if you stretch the drop here, you will find somewhere around 76, 75.8 should be the lows here. And the highs here are now at around 81. This is the zone where we have to be careful in the crude oil. Now see, the moves are increasing in size, and thus a breakout is what you should look forward to. Whichever direction it gives a breakout, it is going to be a stronger one. If you look at the moving averages, these have crossed over, these are trading with divergence, these are staying bearish. See the last candle, lower highs, and it is resumed on the downside. So possibility of a break exists here, which means coming week also we can expect slight bearishness in oil prices, where 76, 75.8 it can achieve. And once it drops below this, you can look forward to 75 and 74. Possibility is there. The breakouts is definitely going to be stronger. But I will share on the other time frame why there is a stronger possibility of a reversal. Look at the stochastic on the 4-hour charts, oversold. It can try to bounce. MACD has seen a stronger wave. It has hit the lows. It is still trading with divergence and with bearishness, and a possibility for it to drop till towards this zone and bounce back. And thus the downside appears to be limited as of now, which means in fact even if it drops towards 75 or 74, the bounce back can be stronger. RSI hitting the lows here. Coming to daily. Now look at the daily charts here, and you can clearly see that it is positioned here at around median and showing swings in between 76 and 80. And now let me include 75 and 81 as well, as it is increasing in size. Once it drops below 75, we can see a sharper fall. Now look at this zone, look at this zone, identically symmetrical. And where are the support levels? Here also 76, 75.8, which is indeed a very good support. And then 74 levels will come into picture. So once it comes out of this zone and drops below 74, you can say oil is reversed. Else what is happening, if you look at the rise, the retracement trading in this bearish channel, breaking out of this flag is where the bulls are waiting, which suggests that once oil stays above 81, there could be a stronger rise and rally, which can again take the prices on the upside. Right now, I am also worried about the crossover here in the moving averages, which are now trading with divergence, which also makes the zone tilt towards 80, 81 as a very, very stronger resistance. If you look at the stochastic here, looking downwards, trying to trade bearish, the MACD. Now observe the MACD here, double bottom, then the rise. This is the retracement, and now it is again looking upward. So it leads to another round of good bullish momentum, but only as long as this time it fails to cross over. But if it crosses over, then we can see a double bottom. Right now I am looking forward to see this. This is the main trend. This is a retracement, and now it may continue on the upside, which suggests that the potential bullishness in oil may continue here. If not in this month of June, possibly the bullish trend will continue very, very soon for the near term. RSI has dropped here, looking downwards. Coming to weekly chart. On the weekly chart, see last 4 weeks just consolidation, barring one single sharp bearish candle, we have seen oil consolidating. And if you connect the lows and the highs, this is the same what we were talking about, 75 to 81. And thus, as long as crude oil stays between this zone 75 to 81, we have to be watchful and careful with our trading decisions. It can try to stay in this swing zone, and any point of time oil coming with out of this zone with force, which means if it drops below 75, we can look forward to at least oil hitting 74, 73.8 levels, and that is again the next strongest support here. So yes, it has to come out of the zone with force in order to continue with the momentum. And on the upside, 81 level, certainly a greater resistance is seen here. Now look at last 2 weeks, what has happened? Couple of retracement, couple of bearish candles, but last two candles, just connect the last two candles, higher highs, higher lows, and then diminishing bearishness is what you can see in these two candles. Thus in the coming week, if you see oil is staying above 78, buy again for 80, 81, and if it is seen trading above 81, consider this as a reversal and a breakout. But if you connect the move here, the rise, right now it is forming a nice flag here, and a breakout here is going to be equally strong. Another observation on the weekly charts here is higher lows it is forming and lower highs it is forming. So it is again a zone of consolidation. Any break below 75, 74 is a indication of near term bearish trend towards 70 levels as well. Stochastic at oversold. Also, one more thing on the weekly charts here is look at the sharp bearish trend, then the reversal, then retracement, then a rise. Now, see, this is the main trend. It is just consolidating before it takes a direction here. So, I will not treat oil as bearish as long as $70 levels are not taken. On the midterm, when I'm saying midterm, 3 to 6 months, as long as $70 levels are not taken, oil prices are going to stay bullish. Now look at the stochastic. This is oversold on the weekly. Now see MACD on the weekly chart. See what a nice base is formed here. Then this is the main trend retracement, and see this is consolidating again. It is crossed over here on the sell side. This is a bearish indication as it is just two candles away. It suggests that it may continue here for a while before bouncing. The next couple of weeks are going to be decisive. Any break here on the downside is definitely going to lead to a stronger bearish momentum for next few weeks as well. So the month of June is going to remain critical for crude oil. Our MACD here is also looking down, and RSI is also looking down as well. Coming to monthly charts, yes, higher lows, lower highs. Now look at what has happened in the preceding candle, a shooting star formation. You can say at the end of a bullish trend is a reversal sign, but then these are two candles which are almost symmetrical. First leaving a tail on the downside, second leaving a wick on the upside. Now if it would have closed here somewhere around 79, I would have considered this for a stronger reverse. But right now it appears that oil may continue here in the trend. The second thing is on the monthly chart, the 50 months average is right now at around 75 levels, 74.5 levels. So even if it continues here on the downside, the support levels at 74, 73.8 are going to remain very, very strong. And that will also complete the third bearish candle formation, and that will also complete the lows of the channel before it tries to bounce back. So it appears that the month of June, it can try to trade bearish, but I will share one interesting observation on MACD and why I have been recommending a buy here in crude oil since long. I have been mentioning a buy since here from $70 level. And now also for the coming month, any point of time oil is staying beyond 81, 82.4 zone, consider that a stronger breakout is on its way. The rise, the retracement, and a breakout is going to be equally strong. So I will still be keeping my bullish stance as long as 75 in the coming month, or in fact 73.8 is not taken. As long as these levels are respected, I will expect a recovery in crude oil prices. Stochastic is rising, that's a bullish sign. Look at MACD here, and MACD is forming a nice, very nice, beautiful formation here. You can see it is stabilized here, and see first wave, second wave hitting the lows here. The chances of a pullback is very, very strong, and this suggests that whenever it crosses over, it will lead to a near term or mid term bullishness in crude oil prices, and it is going to happen very, very soon as well. RSI comfortable here. So now we have seen the charts, you've seen the indicators. Time for me to give you the trading levels and strategies so that you can all trade profitably and comfortably. And before I give you the trading levels and strategy, if you want to learn this art of trading, you can be part of my 31st mentorship batch starting 10th of June. My years of learning and experiences are encapsulated in this mentorship batch. Do not miss this journey. Cherish the learning for life. Be an independent trader. Else, you can be part of my signals channel on Telegram, where trading as per the signals. Also, you can profit, where we trade diverse set of instruments, indices, and commodities. For your queries related to the services, you can write an email or ping me on Telegram. The contact details are shared in the channel and video description. And those who had asked me to recommend a broker where you can trade all the instruments across the globe, which offers a swap-free account at the lowest spread so that you can save much of your capital and there are no hidden charges. You can find the recommended broker link also in the channel and video description. So first, let's talk about the levels to buy. I will recommend you to buy here at 77.3, 77.5 zone. This is the first resistance zone. Beyond this, I will be looking forward to 78 level. And if oil stays above 78, we can look forward to 78.5, 78.4, 78.6 zone. Now see, I am sharing all the critical resistances. And then beyond this, we can look forward to 79, 79.1 zone. Now, once oil stays above this, you can look forward to a stronger bullish momentum. This time, I will expect it to move towards 80, 81, 82.4. Now, this is the zone which oil needs to break. Any point of time, crude oil breaking this zone, if in this month, in this week, or if in next few weeks, whenever you see oil staying beyond this, consider that we are looking forward to 85 and $90 levels, and in fact 95 very soon. This is going to happen, but it will take some time. For now, we have to focus. If it breaks beyond 81, 82.4 zone, then certainly 85 and plus levels can be expected. Else, these are the resistances. Any point of time, oil prices may reverse as long as it stays below 82.4. On the downside, where you should sell, I will recommend a sell at 76.8, and as I have shared, 76.4 first support, 75.8 the next. If it drops below 75.8, we will look forward to 75, 74, 74, 73.8. Now this is the second support, this is the first support, and yes, this is also a greater support here. So you have to be cautious, careful, and watchful. As long as these three levels are respected, we should not be treating oil as bearish. The recovery and the bounce could be equally strong. Below this, we can look forward to 73.2 levels, then 72.4, and then 72 will be seen here, the next strongest support. Though right now it appears to be trading bearish, but my expectation is for oil to show a bounce back. However, it is not showing any such indication besides the monthly MACD. I do not see any indication in favor of a stronger bull. Yes, but once it breaks beyond 81, we can say now the bulls are back. Once it moves beyond 82.5, we can say it is reversed, and then I will stay bullish for 85, 90, 95 levels. Take your positions accordingly, take your trades accordingly. Now, let's have a look at natural gas. See, natural gas, first of all, has seen a very strong rise here. It has hit 3.14 levels, almost 70% yield in a single month is what net gas has seen. And since then, we have seen it eroding much of the gains, and it has already raised 50% of it, coming towards 2.6. Now, see what is happening here. It is trading in the bearish channel here. The drop, the retracement, the drop, the retracement. Now it is very important for net gas to trade above 2.8, 2.85 zone in order to confirm a reversal here. If you look at the move, the bearishness has diminished and it is trying to bounce back. But look at the moving averages here. These are trading with divergence, staying bearish, making 2.65, 2.7 as a greater resistance. This is the first resistance zone. Then 2.85 levels will come into picture. If you look at the stochastic, this is rising. The MACD, if you look at on the 4-hour charts, has hit the lows and it is trying to converge. So possible crossover is what you can look forward to, which means if it stays above 2.6 levels, you can look forward to 2.65. It can try to in fact give a gap up as well. But very important, 2.65 levels it needs to take in order to confirm further rise and reversal. RSI just coming out of the oversold zone here. Coming to the daily, look at the daily charts. In my daily review, in my weekly review, I have been mentioning that the too much of divergence of the price calls for it to converge, and it has been proven again. It has moved towards 20 period moving average. Though right now, if you look at the bearishness got diminished, and you can see a swing candle in the last trading session. But this swing candles still do not confirm a reversal. It has to break past the highs here towards 2.65 and 2.7 in order to confirm reversal. Else, yes, looking at the diminishing bearishness, the chances of a reversal exist. However, once it delivers lower highs, lower lows, once it drops below 2.5, we can look forward to another round of bearishness where the prices are trying to, or prices will try to move towards 2.4 and 2.2. Now why 2.4? The 50 period moving average sitting over here can be the next achievable target, and it is going to be a stronger support before it looks forward to a bounce back and a recovery. If you look at the stochastic, this is oversold here, thus it may try to bounce back a little. But also look at MACD. The crossover in MACD has come at an extremely higher levels, which suggests that there could be a possible continuation of bearishness. So in the coming week, once you see natural gas staying below 2.5 levels stay bearish, we will look forward to 2.5 as the first very strong support. 2.52 and 2.5 as the first and very strong support zone. Then the next target actually for the week is going to be towards 2.4, which is going to be the next achievable level. So this is something you should watch out for. This crossover is coming at a higher level, so it can continue here on the downside. RSI dropping sharp, coming out of the overbought zone. Coming to weekly, now look at the weekly charts. In my weekly review, I have mentioned that there is a shooting star formation, and thus the possibility of a reversal exists. This was the first bearish candle. The second bearish candle can also be there, where the prices might try to move a little lower. How lower? We can look forward to it to move towards 2.4 levels. Possibility exists, and then the 20 weeks average is sitting at around 2.3 levels. Also, one must notice, see, the breakout started from the $2 levels. I do not see it erasing this much of gains for the next couple of weeks. But yes, higher lows is something you can expect, which means it can erode till towards this zone, which is sitting at around 2.2, 2.3 before it looks over to a bounce back. Yes, hitting the lows here, the bounce back and the recovery is going to be equally strong. Now, look at another perspective. If you look at this moment, you will find that it is trading in this bearish zone, lower highs and lower lows. However, once it bounces back, once it breaks beyond 3.5, 3.7 zone is where we can confirm that it will turn bullish. Else right now I can see lower highs, lower lows. However, just notice this, too much of divergence of moving averages on the monthly charts calls for it to converge. This is on the weekly charts. Stochastic is overbought, which also calls for it to pull back a little on the downside. But if you look at MACD, a sharper drop, main trend, retracement. What has happened after the retracement? It is trading bullish, but the bullishness is getting diminished. So once it starts to, once only and only if it crosses over, we should treat this as bearish. Else what will happen? It will converge and then continue on the upward side, which means couple of bearish weeks in the month of June, and then bounce back from the second half of the second week is what you can expect, where we can look forward to a revival in net gas prices from the lows, possibly at around 2.4, 2.2. RSI dropping here. Coming to monthly charts, look at the monthly charts. Reversal sign, first bullish candle, second bullish candle, double top, moving towards 20 period. Three observations here. And see, this is a breakout candle. You can see identically symmetrical formation. You can see identical double top here as well. And thus it is very, very important for net gas to now break beyond 3.15. 20 period moving average it has achieved. Next observation is the body size is almost half of the complete move, or slightly a notch higher than the half of the complete move. This suggests that it can continue on the upside in the coming month as well if it opens flat. But I see that there could be a little pullback before it tries to bounce back. This is what is my expectation. Moving average is 50 and 100 period crossing over here, at 3.5 levels makes it the next achievable and possible level. Now see what has happened here. You can see this can replicate here as well. The drop was slightly gradual. The rise is comparatively vertical, so it can continue to move on the upside. Stochastic oversold, which also calls for it to recover strongly. Look at MACD stayed extremely bearish here for now months and years. You can see last time this was 22 and when it is crossed over, and since then it has seen stronger bearishness. Now time for it to converge, crossover and rise. It requires couple of more bullish candles for net gas to continue on the upside. RSI is also looking up for signs of bullishness. So now we have seen the charts, we have seen the indicators. Time for me to give you trading levels and strategy for the coming week, for the coming month, so that you can all trade profitably. And before I give you the trading levels and strategy, if you also want to learn this art of trading, do not miss to join my 31st mentorship batch starting 10th of June, where I am going to share all the tools, techniques, strategies, and the trade setups with you so that you can trade profitably. Else, you can be part of my signals channel where trading as per the signals also you can benefit, or join my free Telegram channel for live market updates. And yes, those who had asked me to recommend a broker, the recommended broker link also is there in the channel and video description. Now, first, let's talk about the levels to buy. I will recommend you to buy here at 2.6 itself. Wait for 2.62. Now, 2.6, 2.62, first resistance zone. You can wait for 2.65, the next target, and 2.7. Once natural gas stays above 2.7 is where we can look forward to the next target towards 2.8. Now, this is going to be definitely a critical level for net gas to break past by, because once it stays above 2.8, I will look forward to $3 levels, then 3.15, and this time I will look forward to 3.5 levels. Now, see, such a strong recovery is going to be difficult, definitely. But yes, a little rise. But before that, there should be a little drop before it rises. Thus, on the downside in the coming week, you have to be watchful. I will recommend you to sell only if you see it staying below 2.5, where you can expect 2.5 as the first target, 2.5, 2.48, then 2.45, and then 2.4, 2.4 and 2.5. These two levels you should mark. These are greater support here. Below 2.4 is where we can look forward to an increasing bearishness towards 2.36, 2.32, and then towards 2.28, 2.2 levels. Chances for 2.4, 2.3 levels are there, but I will say that be careful on the downside. The downside is limited here. Every drop for the next coming few months should be an opportunity for us to buy natural gas, and specifically for coming few weeks also in the month of June also, I do expect, though it may try to trade bearish, but the bounce back has to be there. So as long as 2.4 is respected, the chances of a recovery and a revival will be very strong. Be at least till this zone, we can expect a stronger recovery. So take your positions accordingly. From 2.4, we can expect a bounce back. So take your positions accordingly, trade accordingly, like, share, subscribe, and comment. Join my mentorship batch signals channel. Reach out to me for your queries. Join the free Telegram channel for live updates, and the channel memberships are on YouTube to support the effort. Have a happy, profitable trading month and a week ahead. Have a happy weekend. Thank you.